snack. And we're finally live. Hey, everybody. How's it going? Happy hump day. It is Wednesday. Happy St. Patty's Day. Kenny clearly has done a much better job wearing appropriate colors than I have because I got pinched earlier. You guys are on the live. Give us a hashtag live. If you're on the replay, give us a hashtag replay. I am Haley Gray. I'm the group owner here on the Women's Entrepreneur Network. I have an amazing guest with me here tonight. I bagged one of my friends and dragged him on, almost kicking and screaming, to talk about some of this financial planning stuff. So welcome, Kenny. So happy to have you here.
Thank you for having me. It's an honor and a pleasure. And I've heard nothing but great things about from previous guests that have been on this. So looking forward to spending an hour with everyone.
Yeah, it's a lot of fun. So if you guys have questions, make sure you type in the questions. We'll circle back around and I'll make sure Kenny gets any questions that you have. So we're going to take the bull a bit by the horns tonight because, there's a lot of people out on, on the Facebooks, on the interwebs, and they do financial stuff with clients. And, not everybody does the same thing, or gives you the same options or operates in the same way. So one of the things I kind of wanted to talk first about, is like, what is it exactly that you do?
What exactly do I do? That's a kind of a loaded question. So I'll start with predominantly it is financial planning, investment management. Okay. So we work very closely with our clients. We don't take anyone and everyone. We do have a select group of people that we like to work with that has a certain demographic overall. And so we are someone who gets to know our clients inside and out. We're not transactional. It's much more of a relationship with our clients, working through them through all different facets of their life, whether that's working on education planning for a child, whether that's starting to think about retirement planning, whether that's where does a new home fit in? Is it a second home? Anything and everything that I think finances touch, we can be involved in. We're not estate lawyers and we're not tax accountants, but we know a little bit about both and can guide them in the right direction. And then we bring in the experts when the experts are needed, whether it's an accountant or an estate attorney.
Mm-hmm. So one of the things that I find particularly interesting about what you do is that you're a CFP or a certified financial planner. Can you explain exactly what in the world that is and why anybody should ever care about that?
So a certified financial planner is really the highest designation you can have within the finance industry, maybe a certified, a CFA, a chartered financial analyst, but CFP is the most common one out there. I went through the Duke continuing studies program where they like to say you can have a child quicker than you can get your CFP certificate. So you have to meet minimum requirements. You have to go through roughly a 9-month course touching on 6 or 7 different subjects. And then you have to pass a 6-hour test. So it holds you to a higher standard. You have what they call, and everyone talks about this word, is a fiduciary obligation to do what is in the best interest of your client. And while it sounds very elementary, in today's world, there are many people that aren't held to the fiduciary standard and maybe give you a product that is good, but maybe not in their exact best interest. And that's what we do. We're completely independent. We're not required to meet a sales quota. We're not required to do anything but what is in the best interest of our client. And that's where we make decisions that, we get very personal with our clients. We get to know them and talk about 3 or 4 different options and, ultimately suggest what we believe is in their best interest.
Right. And I really want to highlight that because one of the things that I see a lot of is, people just want to pay, Scottrade for, the $14.95 or $7.95 trading fee, which can be one way to manage your assets, but you're not getting any advice from somebody who has experience when you're doing that.
Correct. And so, we're not a lot of the stuff that we handle is really what they call no transaction fees. So every time we buy or sell an equity or a fixed income product, there's really not even a commission or any type of transaction fee. Where overall we charge what they call assets under management. It's a flat fee. It's billed quarterly. We do better. If you do better, we do better. And if you do worse, we make less money. So we're on the same side of the table. We're not trying to sell you X, Y, and Z and make it transactional. This is not transactional at all. This is a relationship that evolves over time. We work together. And then, with that fee is financial planning. Again, working with an estate lawyer, that's not included in the price. Working with a tax accountant closely there. Retirement planning, financial planning. Sometimes we do get into budgeting a little bit if that's what we see in the very, very beginning. We'll get you started on the right path, but a lot of it is the overall investment management side of the business.
So, what were you going to say?
It takes like 2 pieces of paper to get registered to just be able to say you're in the financial industry. You got to pass a couple exams. And you're in the business. Like I just had a new client that came on the other day, and she said one of her friends from her MBA class 20 years ago had been in the media world in LA for 20 some years, maybe a little bit longer. He's 53 now. He passed 2 tests and he's in the financial world, calling her up, trying to get her to give him money to manage. I mean, someone from the media world passes a test and all of a sudden they're in the financial world. I've been in the financial services industry since I graduated college, worked on in Wall Street, the term Wall Street, worked with the largest institutions in the world, whether it's a Fidelity, whether it's a T. Rowe Price or something along those lines. That's what I did early in my career, and it transitioned really well to work with individuals.
Right now, and I think that it's important to kind of understand and highlight the distinction between like what you do and like some of the other services out there. And I'm not saying that they're better or they're worse or they're, whatever. But there's this interesting thing that you're talking about with fiduciary duty. You're doing what's in the best interest of the client.
Correct.
So what about, people that are selling what is suitable? Because I've heard that there's some financial advisors, with some companies that they'll, they get a percentage of whatever it is that they're selling. They get fees that are not necessarily disclosed to you. And then their recommendations have to be suitable. So what does suitable mean in this environment?
Suitable overall basically kind of fits what they're looking to do. And I can give you, maybe not a specific example, but when I moved from Wall Street to the individual side, I worked with a company who said, you can offer any product, but this product was really good and better than anyone else. And why? Because it was their product. They wanted you to sell their product and push their product. And so the investment was suitable for them, but it really wasn't in the best interest when I found a better product that may be cheaper over here or more effective. And so there are a lot of products that are price suitable, but are they really in your best interest?
Right.
I hope that clarifies it a little bit.
No, I think it does. I think it's interesting to see, that kind of that suitability test, okay, this will work.
Right. And again, there's multiple different mutual funds out there or different products out there, but we find there are exchange traded funds that may just be more effective than a mutual fund. They get the same type of returns, and the exchange traded fund may be 20 basis points cheaper. That's in your best interest. And there's no what they call trails. Sometimes mutual funds have trails that advisors or brokers get paid off on a monthly basis as long as you hold that fund. We don't have that. Everyone has to take a Series 7 really to kind of get in if you're selling any sort of commissionable product. I dropped my Series 7 just due to rigorous compliance, and we're not selling commissionable products. We work with clients, as I said, on a overall assets under management fee. So I don't need some of those regulations and need to carry a Series 7. I have my CFP, I have my Series 6. I have everything I need to be an advisor, but I'm not required by law to have a Series 7, which is governed under FINRA versus the SEC.
Right.
There's two governing bodies.
Right. And you know what's kind of interesting to me about assets under management, what for the lay person who's never dealt with any kind of like investing, what does that term mean? So
assets under management is what we directly can control and have full discretion on. So someone just retires, it's a simple example, or someone had an old 401k and they're like, well, what are my choices with my 401k now that I've left company XYZ and gone to company ABC? 2 or 3 different options. 1, you could leave it at your old company. 2, you could theoretically roll it into your new 401k at your current new job. B, you roll it out of your old 401k into an IRA, individual retirement account. So let's say it goes to option 3 and you roll it into an individual retirement account. You're really good at what you do. You don't understand investments. That's where you lean on a financial advisor to create the proper portfolio, watch the portfolio, make changes when it's necessary. And so if I'll just use a round number, if there was $100,000 in an IRA that we took control of, we have full discretion of, and we charged 1% for simple math, that would be $1,000 a year. Does that make sense?
Totally.
Does that help explain a little bit? So from there, just complete honesty, it's billed on a quarterly basis. If we were to sever the relationship, there would be a refund of the time that wasn't used during the quarter. But again, with that $1,000 in this case, it's a lot more than just investment management. It's a financial plan. It's all the other stuff that comes outside of investment management or alongside investment management as well.
Right. Now, and that's one of the things that I've experienced because we work with Kenny ourselves, my husband and I do. And, it's that understanding, okay, do we need to go find life insurance? Okay, do we need to put this on our horizon? Do we need to go do those things? And those aren't even necessarily things that you're getting paid for.
Correct. We check so many boxes, and guidance that's just part of the overall financial planning fee that, in that 1%. So there's a lot of boxes we check. It's also, you're getting to know the client from every aspect. As I said, are we talking about refinancing a house? Are we talking about, should I buy new versus used? We can run that exercise if need be. So, we're available. I like to say I'm available 24/6. I take, Sunday off to be with the family. But if I get a call from a client, I'm usually picking that up anyway on a Sunday, just because we know our clients closely. And if they're calling on a Sunday, they probably need some help. Should I refi my student debt? What's going on around the student debt arena right now? There's a proposal that the president may forgive some of past student debt. So a lot of people, we're in, they are on hold right now. So we're just kind of waiting to see what happens. And maybe sometimes refinancing a student loan, which we don't do, we will offer that out to a couple experts that we partner with. But those are the things that we're looking at within your financial picture to see what is best and put you in a better overall financial position.
Right. So what have been the most common questions that you've gotten from clients in the last year since COVID started?
There's a couple of things. Life insurance has probably popped up a little bit more. I mean, everyone knows some of them may have passed from COVID. And so that's kind of on their radar. And, what's the hot stock? What's the hot stock? Should I buy this? Should I buy this? Should I buy this? When should I sell? Right? If you sold, and we had one client who honestly just couldn't take it, and she was relatively young, called us up probably a year ago today or tomorrow or, March 16th of 2020 and said, I need to go all cash. We really didn't think that was the right idea, but It's her money. It was her money. We went cash. She hasn't reinvested in the market. So she sold at the bottom and hasn't got back into the market.
Mm-hmm.
So that is almost irrecoverable.
Right.
And I think we found a lot through the past year is what we talk about so often is everyone in this chat tonight has a different risk tolerance.
Mm-hmm.
What can you accept when the market
Right.
goes down 40% in a matter of a week? Can you put your head on your pillow and still sleep well at night, knowing that time is on your side? Mm-hmm. Or if you know time isn't on your side, then you shouldn't be as aggressive in equities versus bonds, which is kind of a balance, figuring out where everyone wants to be with the perfect equation between, some safety and some risk. We had very few people, ex the one lady that called and panicked. And, I like to say, my wife says I have no emotion, and that's why I feel I'm perfect at this job, because I don't get that emotional, in making decisions like that. We look at it from a much longer term, old enough to live through, let's say, remember the crash of 1987, right? Which I think, if you're in
Black Friday,
late 40s, early 50s or older, you remember 1987. There was a mini crash in 94. Obviously, 2001 is in everyone's mind. The financial crisis of 2008 and 9, the housing debacle, and now COVID. And here we are all those years later, and the market continues to move higher. So there's so many different variables on how we'll invest each one's individual portfolio. But it's all around risk tolerance, what you're comfortable with, and when you need the money. We could have 3 or 4 different buckets of money if we need to, just to match up your timeline of when you may need those monies.
So what does risk tolerance mean?
The risk you're willing to take for the return that one may get for taking that risk.
Right.
So most people, we'll walk you through a couple different questionnaires that say, okay, if the market went down 20% today, how would you feel? If you saw your $100,000, just in a round example, drop to 80, and you handle that? Oh, yes. Or, if we were buying a stock and we said, we're going to hold XYZ for 5 years, and you watch that individual stock in the first 6 months go down 50%, how would you feel? Buy more, sell it, continue to hold and see what it looks like over the next year? Variables like that and questions that kind of put you at, get your attention and see how you react to those type of questions. And there was never a better time to kind of test that risk tolerance in that stress level that our clients were willing to take than last year. Watching the market go down, one day it was down 13%. That will awaken everyone. And there were some people that, we adjusted their risk tolerance a little bit. They had enough, had accumulated a decent amount of wealth and quickly realized that, okay, I don't want to be taking that much risk. I want to be able to sleep a little bit better at night. And we reallocated those funds to where there's not going to, the safer assets. We can put those into a little bit safer assets, and with the rest of his assets, we can be a little bit more aggressive.
Yep. Joe DiChiara says, emotions, how do they affect my business? LOL. He said, I would feel bad if my stocks went down 50%.
It was not easy. Well, first of all, if we find out that that's your risk tolerance, you're not willing to accept, potentially a 50% loss, then that's how we'll allocate a portfolio to where we'll stress test it to where in the worst situation, it wouldn't go down 50%. So
right.
That is, again, getting to know our clients. And that's why we don't work with anyone and everyone. It's impossible to do that with every client, multiple hundreds of clients or thousands of clients, and that's where we just continue to get to know our clients and let them understand what we're looking at and, the possible downside to upside. Everyone cares about how much you can make. It's not about how much you can make. It's about how much you're willing to lose.
Right. So Joe asked the question, how much money do you need to start investing?
with someone like myself, everyone has different parameters. Different firms have different parameters. Someone will take $1,000 to get started. Someone will take $10,000 to get started. Someone has a minimum of 100,000. Again, it's the easy answer, but it's really the truth. It does depend. We are closer, to 100 to 250,000. There are people out there who will take nothing, won't have a conversation with you and say, you're not my type of client unless you have $1 million of investable assets.
Mm-hmm.
Different advisors, some may say, listen, I'm going to zero in and my niche market is dentist only. There's a niche market out there for what's called a CRNA, which is a certified registered nurse anesthetist. They basically work alongside an anesthesiologist, and their demographics is what they want to work with. Make so much and make a certain amount of money, and they decide to know everything about a CRNA as possible. Whether the average CRNA walks out with $200,000 of student debt, we'll make this, we'll do this, So there's so many different niches out there that different advisors may choose. Like I said, I know there are numerous firms out there that will go around and try and collect every $5,000, $10,000 type clients. To each their own. So that's
it's a different model.
Yeah, it's a different model. Like I said, I don't want to work with 1,000 clients. Just not really. It's almost impossible, and it almost becomes somewhat of a liability from a legal standpoint and a fiduciary standpoint. If you're meeting with clients 2 to 3 times a year, depending on what they're willing to, want to meet. Some don't only want to meet once a year. They trust us enough, and they say, you do what you do well, and I'm going to go do what I do well, and we move on and work from there. It'd be tough to talk to clients and do a thorough review on 1,000 to 2,000 clients, 4 times a year.
Yep. And Akerns starts with 0, and he says, I love what you're saying because there are different niches. Christine actually says her 19-year-old son buys Tesla and watches it daily. He has no clue.
You know what? It's a great. That's the best, I guess, thing about the finance. Anyone can do it. You have a little bit of money, you put it to the market, and you're watching it and you're in it, right? So hopefully her 19-year-old is learning a little bit from it. It's not just, we can all do that, and we can go to Vegas or a casino and put it on red or black and win for a while. And ultimately, the casinos are still in business. And if you ever look at their P&L, they have a lot of P's and not a lot of L's. They're profitable companies. So I don't think the stock market is a casino per se, but you have to have some good idea of what you're doing. And if, you're really good, you can make a lot of money. But, we see a lot of people that try and do it themselves, and they come back to us with less than what they originally had when they try and do it themselves.
What do you say to people that try to time the market?
Some of the best people in the world haven't been successful at timing the market. There are some hedge fund managers out there that are really, really good. I think when we talk about timing the market, you have to be right twice. You have to buy it. And then if you sell it, you have to be right there. Or if you you own something, you sell it because you think it's gone up too high, you got to be right again when you buy it. So you almost have to be right 2 or 3 times when you are, quote unquote, trading a name versus investing in a name.
Right.
We're invested in names, and there are times we have to make the tough decision to, it's no longer in the portfolio, whether there's a rotation within different sectors of the market, as what's really going on now. These high growth names have been all the winners since COVID started. You can call a Zoom, you can call an Amazon, an Apple, different stocks like that, Shopify, whatever. And now that interest rates are slowly starting to creep up from very, very low levels, people are rotating out of high growth and into different sectors of the market. And that's where we diversify. We're not playing one single stock, right? We have diversification throughout our portfolio, from large caps to mid caps to small caps to, could be a little bit of biotech. It could be a little bit of cyclical names. And, we're talking about getting potentially an infrastructure bill coming down the pipe after we just had this stimulus, the COVID package. And so, names like a Caterpillar or something like that could potentially do better. But a lot of times the market is already ahead of you, and that's already happened. And that rotation, honestly, out of large cap into some of the cyclical names and industrial names probably started 2 to 3 months ago. And it's now, in the last 2 to 3 weeks, finally being seriously talked about on the news. So there's always shifts happening out in the market that, we see, and we rebalance when necessary. We don't rebalance on a daily basis, but we'll rebalance on maybe a monthly or more often a quarterly basis to get that allocation in line.
Right. So, one of the things that I see a lot of people doing is investing in Bitcoin. I know that you don't do Bitcoin. So, how do you avoid like the pyramid schemes and stuff that are out there? Are there any good questions that people can be asking to know if they're finding a legitimate investment?
I would reach out to someone who's in the financial industry and ask them to do, maybe if they've heard of it from a cryptocurrency standpoint. The SEC has not allowed us to make a lot of comments on it. We're not allowed to make any sort of recommendation one way or the other. That being said, I know there are a ton of people that I know personally and professionally that have done some investing in some of those cryptocurrencies. So, it's one of those, I think we're one of these periods where this is definitely a new product. I think we still haven't figured out whether it's a sham or not. But as you see more and more people start to talk about it, the Federal Reserve has started to talk about it a little bit. There have been some obviously very high profile people that are behind it 100%. It's really hard to say that which one do you pick when there's 40 different ultimate cryptocurrencies out there. Which one sticks is very interesting. And each one, I think, has their own dynamic. From what
how do you even know if something is legitimate or not? So something like, not even just like on the crypto side, but like any of these kind of investments, like if somebody comes to you and say, hey, I've got this great investment, how do you know if something is actually legitimate? Like what questions do you start to ask?
Track record, how long has it been around? Looking at how many people are actually invested in it. Is it just individuals that are invested in it? Are there institutions invested in it? And that's where, to me, we don't even come close to crossing that line of, is it legitimate? We never recommend a penny stock, right? And a lot of our clients like to play penny stocks. I'm not saying they're evil. If someone wants to think they can day trade on their own and pick these penny stocks, and some of them have had tremendous runs, we're more than happy to carve out an amount of money and tell them to go to a TD Ameritrade, to a Robinhood, or anything like that, and trade on your own. We get ourselves in a lot of legal liability if we were to ever put, some small cap, micro cap stocks like that into a portfolio.
Right. So so Joe was asking the question, how do you onboard new clients, and how do you know who a good client is for you?
A good client, I think that's where the initial interview kind of discovery process. What are you looking to do? What are you expecting your financial advisor? It's just the initial interview. And, I think if the best new client is a referral. So if we have a current client that says, hey, I'm working with Kenny or another one of my partners, you should speak to him. That's the best compliment you can get. And I think if a client he or she's referring a friend, you have a pretty good expectation of what that client what their expectations may be. So it's a process. And there's been times that clients and we mutually parted ways. It just wasn't the fit We have total control and total discretion over there. Maybe they wanted to see a lot more trading, calling every day, wanting to know balances and stuff. And you have online access, but you figure out who's the right client, who's not, by feel, by just kind of working with them, sitting down with them, getting to know them, asking them the right questions, if that makes sense.
Right. And he was saying, who was a good client for you? So, generally I would guess somebody who's, trying to save money, save for retirement, has some assets to be invested.
Yeah, that's an ideal client, right? Whether it's, at least 100,000 or 250,000, everyone's a little bit different from that standpoint from minimum investments. But, we're working with some young kids, I don't want to call them kids, young people in the tech industry that are coming out that you see potential in them, right? It's about, you can see a client's progression from, making good money, may have a little bit of student debt. We can work on refinancing that or how to handle that, and then start building them up, right? Making sure they're maxing out their 401k if they have the opportunity to contribute to an IRA or a Roth. Making sure that the basics. And I spoke with someone today who came as a referral, and we started at the very basics, and that's an emergency fund. And that's part of the financial planning. What's an emergency fund? Well, if you're an individual that only has one source of income, if you're married or single, you probably need 6 months of expenses in the bank at all time. So that would be the first building block that we would start working with individuals and go from there, and then slowly move up to making sure that they are starting to save as much as possible. Then maybe we do look at life insurance, depending, they get to the point, they get married, they have some kids. Sure, you can buy some through work, but work's not going to give you the coverage that you need. And, that sometimes is a gap that we look to fill. And that's where we'll start with the very basics and, financial planning.
Yeah, absolutely. Very cool. So how did somebody get in touch with you?
You can give me a call. You can go to our website, Madison Oaks WP, which is Madison like the street, Oaks, OAKS, like the tree, and then W for wealth and P for partner. So we're really Madison Oaks Wealth Partners, but it's MadisonOaksWP.com. My phone number is on there, 919-805-8145. And we'll have a conversation. All initial consultations are complimentary. It's exploratory and completely confidential. Our clients, no one knows we're working with a client unless a client tells their friend that they're working with us. Confidentiality to us is the most important thing, and it's to us the biggest thing.
Absolutely. Thank you so much for joining me tonight.
No problem.
This was a lot of fun. And, thank you. I hope it was helpful to some of our people watching. He says, love the strategies, very fundamental stuff. Sometimes the fundamental stuff is the tough stuff to get in life, in business.
It is. And we're not, I've said this numerous times, and I think this is a process. It's, to get to the ultimate goal. It's not going to happen overnight. It takes time to get rich, unless you hit the lottery or, you're part of a public company that you've owned stock in from the very beginning. But we're there side by side with you. Again, we answer all sorts of questions. It'd be, if I broke into all the questions I get, you'd be amazed at some of the questions we receive. But that's what we do as financial advisors. We work with our clients throughout different phases of their life. And, hopefully in the end, we're all successful and they can, meet their goals, whether that's to retire at 45 or whether that's to retire at 55 or 65, and what that looks like in retirement, after they've, everyone's like, oh, I've collected $1 million. Can I retire? Tell me what you're spending. I like to say it doesn't matter what goes in the funnel, the savings funnel, it's how fast you want to pull it out. You could have $3 million saved up, and if you're spending X amount every year, your financial plan is not going to succeed.
Yeah. So what is the most off the wall question you've ever gotten?
That's a good question. I don't know off the top of my head. I'd have to think about that probably longer than we have time for that. But I would say some of the unrealistic expectations of, can I retire? And it's not real fun having to deliver bad news. But again, in our business, honesty is the best policy. And I'm not going to tell someone that they're on the right path and they're going to be able to retire at 60 if their assets don't match up and their spending is way bigger than what they think what they're spending. So those are the hard conversations to have, but we have to have them because it's a fiduciary responsibility, again, to be honest with our clients and open with their clients. So I don't know, esoteric or most difficult question, but I think some people come to me and be like, okay, I got a lot saved and I want to retire. And that's when you just got to be honest and serious with them and say, we got a little bit more work to do to get there.
Absolutely.
And if you want to get there, these are the changes that are going to have to be made. And we can kind of touch on budgeting with our clients early on, but I could draw the best budget in the world, but I promise you I'm not going to babysit you on budgeting. There's too many apps out there that we could recommend to really track your budgeting. But if I draw up a financial plan and include some budgeting, I'm not going to be calling you every day, did you have an extra Starbucks? And that $3.25, makes a difference and that type of stuff. So that's probably, other people may do that. That's just not what we do.
Yeah, absolutely. No, Mint is a really, or YNAB. There's really great apps out there for the budgeting piece.
Oh, there's a ton of them. Yeah.
Yep. Cool. Well, thank you so much. He said, excellent info. Thank you so much. Thank you, for joining me tonight. I really appreciate it.
I appreciate it. Have a great week. And if anyone's still around, enjoy the rest of your St. Patty's Day.
Awesome. Yeah. Nope. They're hanging.
All right.
Awesome. Thank you so much.
Thanks, guys.